Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty, and I'm doing our weekly market update. Lots going on. I'm going to jump right in here and share my screen with you and get right into this. So, right now we're sitting at 26,000, just over 26,000 active, all property types across the Valley or Greater Phoenix area. Um, that is a good level. Nothing crazy happening there. So that puts us basically in a good range. So the biggest thing right now in real estate, one of the biggest things is the inventory. We're at across the country, we're at the low end of the pre-pandemic levels of 2019, the low end as far as inventory is concerned. What that does is it gives buyers more choices. It also puts a little pressure on sellers. Right now, sellers are giving up about 44% of sellers are giving up concessions, which are closing costs, buying down people's mortgage rates, things like that to get the deal done. So, from that standpoint, it's good because this extra inventory and even some of the people who maybe called it quits right now who are going to put their home back on the market later on, a couple months or next year. It gives us kind of a backstock to work from, and it gives buyers more choices. So when the rates do fall, and they get near six, we're going to see things really boom. We've already had a higher uh, a year than last year as far as mortgage application data is concerned. A lot of those are sellers. 75% of sellers are also buyers, though, in the resale market. In the new home market, there's a story because as I always say, that new supply is really new builds because they're just selling, right? They're not buying like in the resale market. Also, they're offering concessions right out of the gate. They've already got all that priced in. There's no emotion. It's just business to business. So those that market's totally different. And even though their margins are lower than they want, and they also want interest rates to come down like everybody else. Powell has a ton of pressure on him right now. We talked about the shadow Fed before. He's getting pummeled right now. Went through a congressional hearing, Senate hearing. Bill Pulte, Donald Trump. You've got Scott Bassett. They're all working on getting him to lower rates. He's probably going to have at least he's going to be kind of forced into this where they've already talked about it. It's already baked in where they're going to have two rate cuts this year, and the Fed, that deals with about 65 to 75% of what happens with the bond market, and in turn, what happens with mortgage rates because of the 10-year treasury, okay, which I'll get into in just a second. But that he whether he resigns before next May when he has to leave anyway, and somebody else gets the position, they may, they could even appoint someone or say who they're going to appoint and have that person be even more vocal on a weekly and daily basis on what should be happening in the markets. Because right now, with the lower inflation, gas prices are down year over year. It's down like 23 cents, and like the lowest gas prices in 4 years, even with the whole Iran thing. And they're now allowed to do their oil selling and stuff, to whoever. That's been opened up. We've seen a stock market boom. Rates came down a little bit this week, which I'll get into. All good things happening. We've got the tariff with China deal has been reached. India's right around the corner. So we've got, even with all these things going on, they're all heading in the right direction. Okay. So it's kind of taken away all the excuses for the Fed not to lower rates. And if they wanted to be, hey, let's wait and see with inflation, with the PC inflation at 2.1, okay, which is what they follow. And he said before he wants to be in line with that as far as where the Fed rate is, which affects the bond market, 10-year treasury and mortgage rates. It also affects car loans, credit cards, all that stuff, anything to deal with credit. Um, he would be at a neutral policy right now, not so restrictive. He's even said he's being very restrictive, kind of wait and see what happens with all these tariffs and stuff. Well, if that were the case, then you'd be at a neutral policy to wait and see, which would be 3 to 3.5%, not 4.2 to 4.5%, which is kind of the range they're in now. So just putting that out there. Too slow Powell is being too slow and old. But right now we're sitting at 26,000 in the greater Phoenix area residential properties for sale. at the moment, and those are properties not under contract yet. Okay, our Cromford Market Index, which tell us if we're in a buyer, sellers, or balance market. Right now, we're at 71.9. Anything under 90 is a buyer's market. Okay, anything over 110 is a seller's market. Anything within 90 to 110 or 100 is the balance or balance range. So supply is a little bit elevated over demand. Okay, if these two numbers are the same, we'd be in balance at 100 here. So our 10-year treasury right now is running at 4.275. That should be historically 175 to 200 point difference, or 175 to 1.75 to 2 point difference. So right now we should be sitting at right around 6.2, let's say, but we're not. We are at 30-year, that this is the average rates across the country for all the different basic loan types. VA lower than the 30-year conventional. FHA's lower. Uh, but these are the averages across the country. But the number you're throwing out is the 30-year fixed. So that's 6.7 right now, which is a little bit higher in the splits than we want, but it's better than it has been in the past and getting better. So that's a good thing. Next, I want to talk about some things floating around there, renting versus buying. Now, if you're in a place for a short period of time, I would say, yeah, it would make sense maybe to rent for sure, for a year or two. But once you start hitting into that 3, 4, 5 year range, um, it would make more sense to buy, even with what I'm going to show you right now. And again, some of this is a little skewed, but we've got renting versus buying. Comparison across the country. Costs twice as much to be a homeowner than rent in Newark, New Jersey. No surprise there. Same thing with California. Now, renters have the best advantage in Surprise, Arizona. It says here. Um, and then it says it's cheaper to own rather than to rent in 17 cities in Arizona, and it lists a price here, again. So that's why I said it's kind of skewed, but this is floating around, so I wanted to address it. Santan Valley, Buckeye, Gilbert, Tempe, Chandler, Goodyear, and then it gets into other places like Florida, and renters and homeowners are at a dead tie in terms of costs in Indiana and so on. So it gets into all the different stats here. This is floating around, but I want to make it clear that again, I think it deals with your what you can afford and your timing, right? What's your timing? So just wanted to show you that article. And these are just some of the ideas here. Obviously, if you own freedom, freedom to make it yours, more privacy, room to grow, stronger sense of community, feeling accomplished. And what some of the other things, just out of the gate here, you can get pricing like this on new homes, and this is kind of our average right now for a rent, a lease in the valley. And this is the estimated monthly payment, because they're doing all these buy downs. That's on an almost $400,000 home. Okay. So, and a lot of these places, we've got builders that are doing, down payment assistance where you only need a $500 earnest deposit or $1,000 earnest deposit. You get down payment assistance paid for. Some of them are even paying all your closing costs. They're buying down your rate. So it's, when you look at numbers like this, and you're looking at what you're going to pay in rent. Now, again, if you're only going to be in a place for a year or two, okay, totally makes sense not to get into buying, because you want to make sure you're going to be over time. But look at this: from 1988, home appreciation since 1988 has gone way up over time. We had one year with that one small period with the crash, between that 2008 2011 period that we always hear about. Um, and really, that was it. There was one off year of 1% by it was at 1990. Other than that, we see, there's a Einstein called it the compound effect. We call it in real estate too. But once you start breaking that third and fourth and fifth year of owning a home, you start building wealth. You start building equity, and equity is a great thing to have. The net worth of a homeowner is 40 times greater than a renter. Look at that. So that's money in the bank. If you're not investing in other things, that's definitely one way to do it. Or plan for retirement that way. And eventually you pay the thing off if you're there long enough, or you take that equity and move it into something else, or you can even tap into it over time for other things, or improvements on a house, maybe putting in a pool, those sorts of things. Increase in rents from 1988 are up. Now the last 3 years have been kind of flat for rentals. So in the Phoenix area, it's been kind of flat. For you know owning a home, it's been kind of volatile over the last few years, and it's definitely kind of been flat also over the last 2 to 3 years since the 2022, when they started hiking the rates. So just something to think about. When these rates drop, there's definitely going to be more activity, but at least we've got that backstop of that extra inventory across the country and in the Phoenix area. Okay, so that's a great thing. So one of the things I wanted to point out to you was in condo and townhome challenges. Condo and townhome market is particularly weak with a listing success rate of 58%, the lowest since 2011. The overall listing success rate for all property types is 65%, down from 93% in February of 2022. Well, they started raising the rates in like April, May of 2022, with notable low 61% in December of 2022, which was kind of the bottom after the rates went sky high. Okay, so condo, townhome sellers face challenges due to high inventory, HOA fees, insurance costs. Insurance costs are up for everybody across the board for everything. In some areas of the country, they're talking about maybe, there's going to be some issues with even getting some local insurances, where there's hurricane and stuff like that in certain parts of the Sun Belt. Leading to longer sell times and tougher buyer negotiations on those condos. So, um, we're seeing with some of the other stuff like the bombing and all that. We had some uncertainty, and then we had where it was kind of done and over, and we see the stock market boom, and actually rates come down this week, which is phenomenal. So uh, let me get rid of this and just take a look here at the last 24 months price per square foot and the median and average in the red and blue here, for price per square foot across the valley. You can see where it's definitely kind of been a little volatile, up and down, up and down. Okay. And sold to list price ratios. Right now, the median is at 98 and the average is 97. Usually on an average, we like to see that just above 98%. It's kind of a little bit healthier market, but that's not totally horrible. Okay. So if you're pricing a property right, it's going to sell even in this market. Okay. And you're not only pricing it lower, but pricing it according to the traffic in your area, which you want to have your agent kind of do some recon for, really dig into the numbers, really dig into the community, really dig into what other properties you're going to traffic on. Also, how people get approved for loans, how people search for homes by price brackets. And I'm happy to go over that with you anytime you guys would like to. I'd love to kind of dig into that more with you, if you're thinking about selling a home. But if you look at the contract ratio map, which this is what's listed for sale and what's under contract for sale across the valley, you can see that we have only two hot areas, which is six. Hey guys, I'm not sure if that got cut off or not. I apologize. We had a internet issue here, but anyway, let me share back my screen here. Okay, so contract ratio heat map right now in Tullison, 85353. That's a hot area, and in the Glendale area, 85303. Actually used to live in that area, so those two areas are hot. Everything else is just kind of balanced, colder ranges. Again, a few ways to kind of beat what's going on in the market right now is if you're selling, price accordingly, have a good agent that knows how to do that. Happy to help. Also, if you're looking to buy, you want to know what your options are, whether you're selling or buying, without selling. One way to get those lower rates mentioned before is assumable mortgages. buy down rates, whether you're buying a resale or a new home. There's a lot of ways you can get those lower rates. Also, working with a mortgage broker versus a retail lender. And the good thing with a mortgage broker is we've got a fantastic one, Semperfi Home Loans, with Andrew. Full disclosure, he's our son, but he is a Marine. But he'll shop the best rates for you, give you the best rates possible and pricing possible, so that you're not paying junk fees and all that sort of stuff. So on those averages that you see always mentioned in the news or that we show you here, typically they're going to be lower. Okay. And I've seen him work stuff where, we've had like a VA buyer or FHA or conventional buyer come in and they're like, I can't qualify for enough though, and I want to compare. And I don't know what he's able to do, or things that he knows that other loan officers don't know, but he's able to actually get more buying power for them and better fees, better rates. So reach out. All I'm saying is compare us, compare him to whoever maybe you've talked to in the past, and compare, see what works best for you. On renting versus buying, again, it's got to do with your situation. Some people just can't afford to buy, or they don't have the credit to do it, and there's nothing wrong with that. If you need to rent, for the short term, we could certainly again connect you with uh, Andrew, and he can help with that credit repair if you need that, or we can kind of plan ahead and map out what it would take to get you in a home that you want to buy versus rent. But over time, you're going to end up with more equity. So guys, that's all I've got for you this week. If you have any questions at all, feel free to reach out, and we'll talk to you next time. Thanks.